16 offers on a 3-bedroom, 17 on a Cape Cod, with a bid jumping 500,000 over list, and it still wasn't enough. New Jersey's housing market came out of winter like a coiled spring. By January, the thaw had begun. Mortgage rates for a 30-year fixed hovered between 6.06% and 6.16%. That's a full point and change below the late-year peak near 7.8%, and buyers felt it. Each single percentage point drop in mortgage rates can feel like a 9% reduction in price to a buyer. It's a psychological shift with real math behind it. Inventory remains historically tight, but there are cracks. Across New Jersey in January, active listings reached 13,420, up 11.67% from a year earlier, even after slipping 6.38% from December. Of those, 6,348 were newly listed during the month. Sellers still call much of the tune. Percent of list price received hit 100.2% statewide. Yet the tempo is slower than last year's frenetic pace. Properties across the state lingered a bit longer, with days on market stretching to 60 for active listings and 46 for the homes that actually closed. Prices are bending, but not breaking. The median listing price in New Jersey set at $519,999 in January, down 2.8% year over year and 1.76% from December. On the closed sales side, the statewide median sales price landed at $517,250, a 1.6% uptick versus last January. The split tells a story. Asking prices softened while final sold prices edged up. Meanwhile, 1,484 active listings across the state carried price reductions in January, 6.85% fewer than a year earlier, and 9.85% fewer than December, suggesting sellers are testing the market and finding buyers without slashing as often. But under the surface, competition still crackles. One home in Parsippany drew 16 offers in a week. In Rumson, a small Cape Cod listed at $1.20 million pulled 17 offers. A $1.17 million bid lost. On the coast, a condo in Ocean City's Gold Coast came to market at $1.35 million and collected 3 offers in its first weekend. Below the $3 million mark along the shore, agents say even December and early January, typically sleepy, stayed busy. Step back to last year. Home prices across New Jersey rose about 5%. That was a gear shift down from 9% in 2024 and 12% in 2023. This year, expectations are muted. Signals suggest prices will barely rise, around 2%, compared with a prior peak of 18% in 2020. 1. Affordability is edging back, but not racing. Inventory is crawling higher, but still far below normal. Buyers have a bit more leverage in some corners. In others, they're still bringing escalation clauses in all cash. Why is this happening? Start with rates. The move from roughly 7.8% to just over 6.1% in early 2026 reopened doors. To a first-time buyer, that swing changes the monthly payment calculus on every block from Bergenfield to Bayhead. Sellers see it too. A rate-driven pool of shoppers returns, and the homes already on the market, still fewer than pre-pandemic norms, get more eyes. In January, across the country, the total number of homes actively for sale stayed below 1 million for a second straight month, even though national active listings rose 10% year over year. National inventory remained 17.2% below pre-pandemic levels, the widest gap since March 2025. In other words, the runway is still short. Locally, you can feel the friction county by county. North Jersey's 6-county snapshot in January shows the uneven climb. Bergen County added 540 new listings, a 1.82% dip from last January, but 45.16% more than in December as the seasonal ramp began. Passaic jumped to 232 new listings, up 20.83% year over year and 75.76% month over month. Morris posted 288 new listings, down 6.49% year over year, but up 50% from December. Essex registered 324 new listings, a 2.41% year over year drop, even as it jumped 80% month to month. Sussex stood out with 156 new listings, up 21.88% compared to last January and up 47.17% since December. Hudson surged to 388 new listings, a 202.01% year-over-year rise and a 63.03% lift month-over-month. 10 of New Jersey's 21 counties saw year-over-year growth in new listings, and every county posted more listings than December, but not enough to dissolve scarcity. Time on market reflects that hard math. In January, Bergen's typical listings spent 53 days on market, 1.87% faster than last year. Morris ticked down to 47 days, a 3.09% improvement. Passaic slowed to 46 days, 12.2% longer than last January. Essex held steady at 52 days. Sussex stretched to 68 days, an 18.26% increase. Hudson moved to 59 days, up 10.8%. Compared with December, only Passaic and Morris were faster, down 8.91% and 5.05%, respectively. That kind of variance underlines the reality. A buyer in Sparta faces a different clock than a buyer in Hoboken, and both are watching the same rate screens. Prices mirror the patchwork. Among these North Jersey counties, only Passaic posted a year-over-year increase in the median listing price in January, reaching $549,000, up 8.44%. Bergen's median listing price came in at $777,000, a 1.05% year-over-year dip, but 1.87% higher than December. Morris settled at $675,000, down 1.46% annually and 2.1% month-over-month. Essex landed at $549,900, a 0.56% drop year-over-year and a 4.98% decline month-to-month. Sussex slid to $399,950, down 3.33% annually and 4.08% monthly. Hudson listed at $599,000, down 1.96% year-over-year and 0.08% from December. Even price reductions paint two pictures. Compared with last year, North Jersey saw more cuts in Essex, Sussex, and Hudson, 23.08%, 17.65%, and 18.92% higher, respectively, while Passaic and Morris actually had fewer cuts, down 17.65% and 4%. Bergen was flat year-over-year with 108 reductions. Underneath these averages sit real, lived stakes. Consider Rumson's Cape Cod that drew 17 offers. It was listed at $1.20 million, and a $1.70 million bid didn't clear the bar. Or Parsippany's 16-offer sprint. Or that Ocean City Gold Coast condo at $1.35 million with 3 offers by Monday morning. Those numbers sketch a map. Coveted neighborhoods, water views, and move-in-ready single-family homes are still getting pounced on, especially under $3 million at the shore. In Monmouth County, agents describe listings with water views that attract multiple offers within a day or two. The clock in the competition bend hardest where demand most exceeds supply. Statewide January data fills in the edges. Closed sales totaled 5,090, down 8.4% from last year's first month. Pending sales registered 4,868, off 10.8% year-over-year. New listings counted 7,619, 3.1% fewer than January a year ago, even as homes for sale rose to 14,717, a 5.3% increase. That gap, more total availability, but fewer fresh listings, keeps buyers circling a limited pool. Single-family homes posted a median sales price of $575,000 in January, up 1.8% year-over-year, while townhouse and condominium median sales prices edged down to $408,000, a 5.1% decline. Adult communities landed at a $365,000 median, off 2.1%. Days on market across all property types reached 46, a 7% rise, another sign of a market feeling for a new balance. And there's psychology. Why spend all this money renting every year? It's time to buy. That's a refrain echoing along the shore, where March is usually the busiest month because buyers want to close before Memorial Day. Winter's cold can delay the first showings by a week or two. But as rates step down, buyers sitting on sidelines for a year find the urgency returns. The difference now is focus. 3 bedrooms you truly need versus the full acre you wanted. The neighborhood you said you'd never leave versus one town over with a shorter line. Still, cash is king. In multiple offer situations, an all-cash bid strips away contingencies, shortens closing timelines, and tilts decisions. Make it clean and make it fast. That's the message borne out by percent of list metrics, hovering above 100%, and by the lived experience of 16 and 17 offer weekends. Buyers who arrive pre-approved, proof of funds letter in hand, and an attorney already retained, stand out in a field where seconds matter. Zoom out, and you can trace the edge where residential and commercial markets touch. In 2025, one local capital markets team closed 91 deals totaling $4.40 billion, nearly 20 of them in the office sector. Some of those offices will be torn down or repositioned. Some will stay offices. There's a quiet comeback in select buildings where owners invested in quality and function, leasing is improving, and in some cases, rents are ticking up slightly. In Jersey City, lease-ups have clocked as high as 80 to 100 units a month, so fast it's hard to move people in that quickly. Developers are leaning into transit-oriented projects and places with a clear demand imbalance. One company has 3 North Jersey developments, representing $900 million in total value, including the crossing at Brick Station in East Orange and a major project at 90 Bayard Street in New Brunswick. Why here? An affordability bridge from Manhattan, employers following talent, and a toolbox of state incentives from Aspire to HMFA, designed to nudge private capital into housing and mixed use. Meanwhile, headwinds remain: significant year-over-year increases in construction costs, long lead times for switchgear and transformers, and broader uncertainties tied to tariffs, the federal tax bill, interest rate volatility, and immigration. Even the transition from Opportunity Zone 1.0 to 2.0 under the One Big Beautiful Bill Act has some investors pausing as they wait for clarity. Yet liquidity is thawing. A recent refinancing drew dozens of bids, and for the first time since early 2020, some see cap rates exceeding stabilized debt costs, positive leverage returning in pockets. In a supply-constrained economy, the assets that win are those that are operationally productive: right place, right quality, right function. That matters for renters who hop from the island to the other side of the Hudson. It matters for owners deciding whether to add units to a pipeline. It matters for anyone mapping how today's rental markets ripple into tomorrow's for-sale inventory. Back on the residential street, price growth across New Jersey towns in the 12 months through December 2025 shows both persistence and a pattern. At the top, the borough of Deal posted a typical home value of $4,127,662, up $339,174 over the year, a 9.0% jump. Alpine followed at $2,981,806, a $286,361 rise, up 10.6%. Loch Arbor climbed to $2,880,330, up $242,046, a 9.2% increase. Saddle River reached $2,183,701, up $207,827, a 10.5% lift. Bayhead landed at $2,322,964, up $174,477, an 8.1% annual gain. Seagirt came in at $2,275,343, up $172,462, an 8.2% rise. Allenhurst hit $2,185,129, up $166,804, or 8.3%. Demarest notched $1,388,103, up $156,620, a 12.7% increase. Franklin Lakes climbed to $1,407,960, $526,032, up $145,864, a 10.6% gain. Mantaloking hit $1,960,573, up $138,872, or 7.6%. Mid-tier markets surged too. Spring Lake's typical home value reached $1,347,475, up $119,657, a 9.7% jump. Short Hills approached $2,202,226, up $120,563, or 5.8%. Englewood Cliffs stood at $1,675,663, up $120,725, a 7.8% increase. Summit posted $1,311,256, up $105,697, an 8.8% move. Essex Fells rose to $1,360,834, up $95,630, a 7.5% change. Haworth moved to $1,132,051, up $95,351, a 9.2% climb. Rumson, the same place where a $1.70 million bid failed, registered a typical home value of $2,086,407, up $92,289, a 4.6% increase. Interlaken climbed to $1,507,903, up $89,979, or 6.3%. Chatham's typical value hit $1,257,148, up $89,942, a 7.7% bump. Brielle reached $1,215,098, up $85,756, or 7.6%. You can map the suburban spine, South Orange at $1,035,189, up $80,512, an 8.4% pop. Wyckoff at $1,083,888, up $75,850, a 7.5% increase. Ridgewood at $1,142,556, up $74,796, a 7.0% rise. Gloucester at $1,112,184, up $72,651, also 7.0%. Milburn at $1,184,088, up $68,167, or 6.1%. Woodcliff Lake at $1,181,015, up $67,468, a 6.1% gain. Florham Park at $981,400, up $67,084, a 7.3% move. Upper Saddle River at $1,342,672, up $65,127, a 5.1% lift. Ship Bottom at $1,400,320, up $64,851, a 4.9% change. Westfield at $1,208,420, $2, up $63,307, a 5.5% increase. Even the classic commuter hubs kept climbing. Montclair at $1,081,750, up $61,844, a 6.1% gain. Maplewood at $899,232, up $62,974, a 7.5% lift. Glenrock at $997,577, up $63,314, 6.8% higher. River Edge at $806,803, up $57,671, a 7.7% increase. Roseland at $798,556, up $60,737, 8.2% higher. Palisades Park at $944,897, up $67,727, a 7.7% jump. Old Tappan at $1,176,589, up $59,749, a 5.3% rise. Point Pleasant Beach at $1,026,673, up $56,908, 5.9% higher. Madison at $984,383, up $53,743, a 5.8% gain. Livingston at $1,026,961, up $53,726, 5.5% higher. The Shore's arc is unmistakable. Harvey Cedars at $2,053,126, up $106,511, a 5.5% rise. Long Beach Township at $1,927,028, up $58,705, 3.1% higher. Barnegat Light at $1,526,912, up $59,252, a 4.0% increase. Ship Bottom at $1,400,320, up $64,850, $1, 4.9% higher. Spring Lake, Seagirt, Bay Head, and Manteloking all posted six-figure annual increases. In Beach Haven, the typical home value reached $1,605,665, up $53,950, a 3.5% increase. Strathmere came in at $1,531,355, up $56,457, a 3.8% move. Avon by the Sea tallied $1,654,225, up $60,275, a 3.8% lift. Margate City posted $1,043,514, up $63,970, a 6.5% gain. Meanwhile, the statewide machine is throttling back. Last year's 5% price gain, following 9% in 2024 and 12% in 2023, has bled into expectations for 2026 of roughly 2% growth. That's a cooling, not a crash. Inventory is still thin, but in January it rose 14% year-over-year in a key statewide measure, and active listings were up 11.67% compared to the same month last year. Homes for sale reached 14,717, 5.3% more than last January. Days on market ticked up. Listings with price cuts were fewer than a year ago. Mortgage rates edged down and steadied. This is what a landing looks like. Not soft everywhere, not smooth for everyone, but a shift towards slower, more stable. On the ground, buyers are adapting. Pre-approval is no longer a formality, it's the ticket through the door. Lenders can outline the monthly payment, principal, interest, taxes, and insurance before you bid, and that certainty matters when offer due is stamped within 48 hours. Cash eliminates appraisal contingencies, speeds closings, and wins tiebreakers. Off-market conversations have become more common too. When inventory is tight, a phone call before a listing hits the portal can be the difference between paying list and waiving inspections at midnight. Sellers are adjusting as well. List too high, and your listing risks joining the 1,484 January price reductions across the state. List within the pocket, and the 100.2% of list price received shows you can still capture full price or a bit more. Homes under $3 million at the Shore, attractive single-family homes with water views, and well-located North Jersey colonials are drawing multiple offers quickly. By contrast, in parts of Sussex, where days on market rose 18.26% year-over-year to 68 days, buyers have a little more room to ask for repairs, negotiate credits, or keep inspection contingencies intact. National context adds one more layer. In January, the national median listing price was $399,900, unchanged year over year and month over month. Nationally, listings typically spent about 78 days on the market, 5 days longer than last year, marking the 22nd straight month of homes taking longer to sell on a year-over-year basis. About 14.3% of listings carried price reductions nationwide. Active listings grew for the 27th consecutive month on an annual basis, but the number of homes actively for sale stayed below 1 million for the second month in a row. The country's housing supply remains 17.2% beneath pre-pandemic levels, the widest shortfall since March 2025. Where does that leave New Jersey? In a word, competitive. But it's a different kind of competition than in 2021 or early 2022. Buyers are more selective. I'm not paying $600 for a $400,000 house. That's the new guardrail. And so we get this standoff. Sellers who would like last year's peak, buyers who want a fair number grounded in today's rate, and the in-between price that actually closes. What's next? Base case, a robust but more rational market through 2026, with statewide prices edging up around 2% for the year. Inventory continues to rebuild from a low base. Active listings in January were up double digits year over year, and statewide homes for sale rose 5.3% compared with last January. Days on market will likely stay elevated relative to last year's first quarter, with some counties, like Passaic and Morris, staying quicker than others, and with Hudson, Essex, and Sussex feeling slower until spring absorption catches up. Two watch items could tilt that path. First, mortgage rates through spring. In January, the 30-year averaged between 6.06% and 6.16%. If rates drift a half point lower, the feels-like discount to buyers deepens meaningfully. If they bounce back towards 7%, affordability tightens again. Each 1% move in rates can feel like a 9% swing in effective purchase price. Watch that week by week through March and April, especially as shore buyers aim to close before Memorial Day. Second, the supply pipeline by county. In January, new listings rose year over year in Passaic by 20.83%, in Sussex by 21.88%, and in Hudson by 22.01%, but fell in Bergen by 1.82%, in Morris by 6.49%, and in Essex by 2.41%. If those increases in Passaic, Sussex, and Hudson are sustained into the spring, days on market should ease and price reductions could tick higher there. If Bergen, Morris, and Essex continue to trail last year's new listing pace, even as buyers return at 6%-ish mortgage rates, expect more multiple offer scenarios and percent of list ratios to hover at or above 100%. There's also a third current running underneath, development capital. After 91 closings totaling $4.40 billion in 2025 for one prominent team, bids for debt are back in the dozens. Cap rates, in some cases, are exceeding stabilized debt costs for the first time since early 2020. If that holds across the year, expect more shovels in the ground on the kind of operationally productive assets that can be leased at 80 to 100 units a month in Jersey City and absorbed by renters priced out of Manhattan. But keep an eye on construction costs, equipment lead times, and policy variables such as tariffs, the federal tax bill, immigration, and the shift from Opportunity Zone 1.0 to 2.0 under the One Big Beautiful Bill Act. Any one of those can slow timelines and shift supply forecasts. For buyers, the playbook is straightforward but strict. Be pre-approved, be fast, and be flexible. Decide what you must have, 3 bedrooms for a growing family, for example, and what you can bend on, lot size, school district adjacency, or the dream of an acre. In a market where 100.2% of list is the closing norm, and where a $1.20 million listing in Rumson can attract a $1.70 million losing bid, certainty and speed are your leverage when cash isn't. For sellers, the message is simple. Price inside the pocket and let the market work. If your home is in Bergen at a $777,000 median listing neighborhood, or in Passaic, where the median listing price is $549,000 and rising 8.44% year over year, the buyers are there. If you're in Sussex at $399,950 with 68 days on market, consider the terms and the timing that keep your days low and your percent of list high. New Jersey's housing story in 2026 is not about a crash or a bubble. It's about recalibration. Prices edged up 5% last year, slower than 9% the year before, and 12% before that. January brought a 2.8% year-over-year dip in the median listing price to $519,999 and a 1.6% uptick in the median sales price to $517,250. Active listings reached 13,420, up 11.67% year-over-year. Homes for sale totaled 14,717, up 5.3%. Closed sales came in at 5,090, down 8.4%. Pending sales were 4,868, off 10.8%. Days on market rose to 60 for active listings and 46 for closed. Price reductions on 1,484 listings came in lower than a year ago. Mortgage rates sat between 6.06% and 6.16%. The pieces are in motion. From Alpine at $2,981,806 and deal at $4,127,662 to Montclair at $1,081,750 and Maplewood at $899,232 from Jersey City lease-ups running 80 to 100 units a month to the crossing at Brick Station in East Orange. And from 540 new January listings in Bergen to 232 in Passaic and 388 in Hudson, the market is telling a consistent story. Demand persists, supply is healing. And the next 6 months will decide how fast New Jersey moves from sprint to stride. If you're tracking this market, watch February through May like a hawk. Rates, new listings by county, and days on market splits between places like Bergen at 53 days and Sussex at 68. That's where you'll see whether the 2026 base case, around 2% price growth with more choices than last year, holds, or whether another burst of competition reclaims the stage. Make your move deliberately and make it with the numbers in hand. If this helped you see the market more clearly, share it with someone who's about to start their search.